Assalamualaikum warahmatullahi wabarakatuh. We are from Group 1. So today we are going to present about accounting scandal of Megan Media Holding Berhad. Before going into details, let me introduce you our team members. Our team consists of 6 members, which are Fuzla Alia, Nurnisha Umairah, Nur Shahira, Hanan Sofia, Nur Akila Iliana, and me, Ayla Farzana. Now, let's explore more about this company's background. The name of the company is, as I mentioned earlier, is Megan Media Holding Berhad, that we call as MMHB. It was incorporated in Malaysia on 23rd October 1999, and MMHB was founded in early 1994 by Tan Sri Datuk Haji Muhammad Yusof bin Abdul Rahman. The primary activities of the company involve investment holdings and offering management consultancy services. Then, let's dig into their business evolution. Initially, the company started as a manufacturer of optical discs. Then, they entered other businesses, which is production of electronic and automotive parts, magnetic tape, and multifunction discs. After that, in 1996, MMHB entered a joint venture with Memory Technology Sendirian Berhad. Then, in the year 2000, MMHB was listed on the second board of Kuala Lumpur Stock Exchange. Then, on December 3rd, 2002, their total shares were transferred to main board of the exchange under industrial product sector. The aggressive marketing approach has made them achieve status as the largest manufacturer of CDR and DVD-R in Malaysia. This slide is about the chronology of the accounting scandal. The accounting scandal of MMHB began in 2006 when they failed to submit annual audited financial report for financial year ending April 30, 2007 to Bursa Malaysia. However, the company had announced an audited financial statement show a net loss of 1.14 billion for the quarter ending in April 2007. Then, for period ending April 2007, the company reported net loss of 1.26 billion ringgit Malaysia compared to net profit of 60.22 million for financial year ending April 2006. After that, Securities Commission undertook an investigation into MMHB and alleged that both Kenneth Kok Hansen, the former financial controller, and Datuk Dr. Haji Muhammad Adam Cik Harun, as the executive chairman and director, had submitted false financial statement to Bursa Malaysia. Then, false financial statement. It involved overstated revenue, and the company's subsidiaries did not reimburse substantial debt to local banks. Then, Datuk Dr. Haji Muhammad Adam Cik Harun was found guilty of providing false information to Bursa Malaysia on the company's earning amounting to 306 million and 150,000. Then he was convicted and jailed for 18 months and fined 300,000. The conviction was upheld by the Court of Appeal in 2020.
The next part is the legal implication. In Megan Media Holdings Berhad MMHB, there are 2 individuals implicated in this scandal, included Kenneth Kok Hansen, the former financial controller, and Datuk Dr. Haji Muhammad Adam Cik Harun, the executive chairman and director. I will explain further about Kok Hansen. Kok Hansen, aged 63 years old, he was pleaded guilty in the Sessions Court for abetting the public listed MMHB in submitting false revenue figures of over 1 billion ringgit in its financial statement for the year ended 30 April 2006. He also admitted to 3 other outstanding charges of falsifying MMHB's revenue figure for the first 3 quarterly financial statement of 2007. Sessions Court Judge Encik Asmadi Hussein had on 18 August 2009 sentenced Kenneth Kok to a fine of 350,000 ringgit to be paid the next day in default of a year's imprisonment. He was faced charges under Section 122B with Section 122C, of the Securities Industry Act 1983 (SIA). At the material time, Kok was the personal assistant to the executive chairman of MMHB, which is Datuk Dr. Haji Muhammad Adam Cik Harun, also charged under the same section as Kok for furnishing false under revenue figure. So the next presenter will explain further about Datuk Dr. Muhammad Adam Cik Harun.
Dr. Haji Muhammad Adam Cik Harun, former Executive Chairman of Megan Media Holdings Berhad (MMHB), was found guilty of providing false information about the group's income to Bursa Malaysia. He was fined RM300,000 and faced a year in prison if he failed to pay. This offence under Section 122B amending Section 1221 of the Securities Industry Act 1983 is punishable by a fine up to RM3 million or up to 10 years in prison. The Court of Appeal upheld the Section Court's conviction from 2007. This case has highlighted the serious consequence of financial misconduct and the need for accurate financial reporting to maintain markets' confidence. And the last one is the implication. The implication is Megan Media was placed under RPN 17 status by Bursa Malaysia due to serious financial problems, indication it could not meet the obligation or face significant losses. Not only that, Megan Media also failed to resolve its financial issue within the required time frame and was consequently delisted from Bursa Malaysia on February 19, 2008.
The factors that lead to fraud, which are financial pressures, lack of regulatory compliance, corruption and internal misbehavior, and the last one is poor external audits and the use of fake transactions. For the first one, which is financial pressures, Megan Media Holdings Berhad, which is MMHB, faced severe financial challenges due to substantial debt, with subsidiaries like Memorial Tax Negara Berhad and MCGPT Ltd failing to meet bondholder payments of RM47 million. To address financial difficulties and maintain investor trust, MMHB inflated its sales by 306 million, thereby falsifying its financial statement. The second one is lack of regulatory compliance. Megan Media submitted fraudulent financial information, violating Section 122B of the Securities Industry Act of 1983. The company falsified financial statements and failed to meet bondholder payments, demonstrating non-compliance with regulatory standards, which contribute to fraudulent activities and severe legal consequences. Next is collusion and internal misbehavior. Datuk Dr. Haji Muhammad Adam Cik Harun and Kenneth Kok Hansen, key figures in the company, directed fraudulent activities by falsifying financial data and misleading regulatory agencies, thereby scamming investors and stakeholders. The last factors is poor external audits and the use of fake transactions. Megan Media uses fake creditors, transactions, and receivables to falsify financial performance, which not only distorted the company's financial position, but also exposed flaws in the external auditing process, as KPMG failed to detect these fraudulent activities.
Next, I want to discuss the significant role that corporate scandals play in the development of accounting and the profession. There are 6 key points. First, regulatory reforms. Corporate crises often lead to crucial legislative changes aimed at increasing transparency and accountability. The Megan Media Berhad scandal is a prime example. This scandal prompted Malaysian regulators to truthfully review and potentially change accounting standards and corporate governance rules. Authorities focus on enhancing the rules and responsibilities of auditors and directors to prevent such incidents in the future. One major reform was the introduction of key audit matters, or KAMs. These new requirements are designed to improve audit quality by providing greater insight into critical issues. Additionally, there were increased in fines for non-compliance and false reporting to deter financial misconduct. Such legislative changes aim to ensure that our financial systems are robust and reliable. Second, enhanced auditing standards. Scandals like that of Megan Media Berhad highlight the need for stricter auditing standards. In the wake of such crises, auditing firms face heightened scrutiny, which leads to more extensive and detailed audits. Enhanced standards now include stricter audit documentation, carefully internal control assessment, and a stronger focus on fraud risk detection. The introduction of CAMS has been particularly impactful. Auditors are now required to highlight and discuss the most complex areas of an audit, increasing both transparency and accountability. These measures aim to improve the detection and prevention of financial misstatements, ensuring that financial statements are accurate and trustworthy. And next, professional ethics and conduct. Corporate scandals underscore the critical importance of ethical behavior in the accounting profession. In response, professional accounting organizations have strengthened ethical guidelines and standards. Enhanced ethical norms now include greater transparency requirements, comprehensive conflict of interest procedures, and stringent auditor independence criteria. Moreover, these organizations promote ethical behavior through training programs that focus on ethics, fraud detection, and ethical decision making. These programs aim to foster a stronger ethical culture within the profession, ensuring that accountants not only have technical skills but also obey to the highest standards of ethical conduct. This can improve the integrity and credibility of the accounting profession.
Strengthening corporate governance. The Meghan media scandals highlighted the necessity for strengthening corporate governance. This includes robust supervision and compliance measures to prevent improper behavior. Boards were enforced with more independent directors, and the roles of chairman and CEO were separate to avoid conflict of interest. Enhanced risk management and internal control were introduced to identify and prevent fraud. Additionally, stricter disclosure requirements were implemented to ensure stakeholders receive timely update on organizational performance and financial position. Improving financial reporting standard. The Meghan media scandals reveal significant issues in financial reporting, necessitating changes. Authorities worked closely with market participants to update and enhance accounting standards. New rules were introduced to improve the quality, comparability, and relevance of financial information. There was a strong emphasis on compliance with international accounting standards to align with global norms, thereby increasing the credibility of financial statements. These improvements aim to ensure accurate and error-free information and boosting investor confidence. Lastly, educational reform. The scandal also led to educational reform in Malaysian accounting program. Curricula were adjusted to focus on ethical issues and professional code of ethics. Real-life situations replaced hypothetical examples to better prepare students for practical challenges. The emphasis was placed on lifelong learning and continued professional competence. These changes aim to equip future accountants with both technical and ethical skills, ensuring they are prepared to navigate the complexities of their profession ethically and effectively. That's all from us. Thank you.